Hello, everyone. I want to welcome you to today's DeFi Roundtable with Aves Lair and Crypto Traders International. I would ask you to wait 2 more minutes so we give every attendee the opportunity to dial in, and then we can start. All right, then I would like to introduce to you Dr. Lee from Aves Lair, who is going to give us a quick intro about Aves Lair and what they do. And then I'll give a little intro. Mr. Lee.
Great. Yep, great. Thank you very much. So hello, everyone. My name is Chong Lee. I'm the venture partner of Aves Lair. I'm so glad to have all of you here today. And it's a big party, and it's a party of DeFi. I know this is a hot topic right now these days, and all the guys join our event today will be a big fan of DeFi. So I'm pretty sure you're gonna learn a lot from our Roundtable event. And Aves Lair is a New York-based accelerator program. And basically, our goal is we want to help the startups working in AI and blockchain to grow fast and become mature as soon as possible with very high qualified technologies. So we are basically going to host 2 batches per year. And for each batch, we're going to have 5 to 10 teams. So we selected these teams very, very carefully. For the first batch, for example, we screened more than 3,000 startups, and we did interview more than 200 startups. And at the end of the day, we only selected 5 to 10 startups. So, and the uniqueness of our Aves Lair accelerator compared with the other accelerators, for example, like a YC or the Techstar, is we have very experienced in-house engineer and scientific teams that are going to help these startups to work to provide technical support to all these startups. And I think this is very, very important for the early stage startups to grow fast at this moment. All the startups need a very mature technical team to support them at the very beginning. And this is our advantage and our value. So, and also our accelerator has a background in a very international background. That means we have connections to China, to European countries, to Latin American countries, and we can help our startup to build connections and the market in all over these countries. So this is very important for them as well. Okay, so our first cohort will start early next month in early October. So I'm pretty sure now we have around 10 teams in our final list. I hope all of you guys will be following us on this first cohort. I'm pretty sure that you're gonna learn a lot from these wonderful and very novel ideas from these startups. Thank you, everyone.
And thank you very much as well, Dr. Lee. I can encourage everyone to follow the other sessions of Aves Lair, and potentially even with the next opportunity, apply yourself if you have an interesting startup. I want to take a minute and introduce Crypto Traders International as well. We started very early in 2008 here in Berlin in Germany as a very small group that was conducting monthly regular small meetups about algorithmic trading. And over time, we grew to a large international community, especially when the pandemic started, we were starting to focus more on virtual events. So I'm very happy that our community grew so quickly and is so large today. And I'm very happy that we were able to organize a great quality of events and also have today very interesting speakers on our panel. So with that, I would like to give over the word to our panelists for our today's roundtable event. And I'd like every panelist to introduce themselves, tell us a little bit about your background, how you started, what you are doing right now, and what makes you passionate about DeFi. Let's start with Hugo. Oh, you're on mute right now.
Hi, I'm Hugo. I'm co-founder and CEO of Lair Networks. My background was as a commodity trader at two large sort of hedge funds out of London, principally trading commodity derivatives and options, volatility strategies. So after doing that for 7 years, I got bored and ended up going back to UCL to study machine learning, which is where I met my two co-founders of Lair, Sean Rowan, and our chief scientist, Nairayusha. So we came into the market really with the idea that what we saw for scaling smart contracts has some deficiencies. It's extremely useful, but it has some deficiencies in terms of you have to use value. Generally, the main ways that scaling works today in proof of stake type systems is that you have to use value to secure the network. And whilst that works for what we've built so far reasonably well, although it has some deficiencies when it comes to things like yield, offering an alternative to staking returns, which can cannibalize the safety of the network. That's actually the least of our concerns. Our biggest concern is if you take staking to the sort of logical conclusion of these networks actually being incredibly valuable and for large amounts of business being transacted on them, that you may run into issues whereby you need so much capital for staking that it makes the business wholly inefficient. It makes the entire system incredibly inefficient and a much worse sort of alternative to what we currently have. So we set about looking at how to build a smart contract network that doesn't require value for security. And we did that essentially, we came up with the first Turing complete federated by Xantina agreement algorithm, and that's Flare. And Flare will be deploying sort of Q1, Q2 next year, having done what we call a utility fork of the XRP ledger, which is where if you currently hold XRP and you hold it on the 12th of December when we do our snapshot, you will be eligible to receive our token. It's then our objective to allow for the trustless and decentralized use of XRP on Flare with things like DeFi. Thank you.
Thanks, Hugo. So quick explainer for our audience that is not so deeply involved into blockchain. So Hugo is working with his team on the infrastructure side, on the protocol level of blockchain technology. So he's potentially going in future to provide the infrastructure on which our DeFi applications are going to run on. And now I would like to give over the words to Miko, and also please introduce yourself.
Yes, of course. Hi, my name is Miko, and I'm a general partner with Gumi Cryptos Capital, and we are a $30 million US venture capital fund. And of course, we are given crypto in the name. We're very interested in blockchain and, of course, DeFi. So, we're actively investing in the DeFi space and deploying capital. That's my perspective. And to me, I look at DeFi as this incredibly emergent and natural phenomenon, right? Which is that, I think philosophically, energy is always looking for things to do, right? And so the thing that is amazing is that, you know, Ethereum was built with this idea that there's a value store based on currently proof of work, and that this value store is Bitcoin-like, of course. Like, as we know, Vitalik Buterin was a magazine journalist for a Bitcoin magazine before he created the Ethereum blockchain, right? So there's a store of value element, but there's also this computational layer that sits on top, right? So what a natural occurrence for this incredible, you know, almost biodiversity to emerge on top of this energy source. So there's financial energy, and then of course there's human activity, which creates the kind of computational economy that Vitalik was originally envisioning, because Ethereum is of course a utility in the sense that it is a gas, and that Ethereum actually is also used to perform a lot of computation. And now that computation is reaching levels where, you know, people are paying, you know, $100 just to transact. So, you know, it's a problem. Scalability becomes a problem to the extent that, like, people lining up outside the Apple store to get the newest iPhone is a problem, which is, you know, there's just too much demand. So, and not enough supply. But, you know, solutions are coming. Obviously, we have unique and novel layer one solutions like Flare that Hugo's working on. So we're going to see some very exciting developments in performance, and we're going to see some very exciting developments in DeFi. So that's why I'm optimistic.
Thank you, Miko. And also something I'd like to add for the audience, who doesn't know Miko might know Miko's last venture, which was Evercoin, or which is still Evercoin, and which was a very interesting project. Actually, a hardware wallet that you can use with your phone. So I found that pretty interesting. So now I want to give over the word to Jason from DeFiner, who has also a very interesting history. Please, Jason, introduce yourself.
Yeah, hi everyone. This is Jason, the founder and CEO from DeFiner. As you can tell the name from DeFiner, we are decentralized finance and community-driven people. That's why we have ER. And also to define the future of open finance. I started the company like February 2018. It has been 2.5 years for now. It has been, you know, it's pretty rough 2 years, but recently there's a lot of enthusiasm in the DeFi area. For DeFiner, we are a DeFi lending protocol. And the reason why I start DeFiner is because I truly believe in the DeFi can lower the financial transaction cost and give back the ownership to the people. And regarding the product, why we are different and why we, you know, the current market still need our product is I don't like the spread between borrow and lending rate on any current available lending protocol. For example, Compound or AAVE, the spread between lending and borrow rate is too wide. The reason is the capital utilization rate is so low. And that's why we added the aggregator functionality on top of the lending protocol. Therefore, for any unallocated lending or capital, the aggregator functionality can redeploy it to the money market. So for any fund on our protocol, it's always safe, secure, and work. You know, all the time. It's not like you know, you park the capital on Compound or AAVE, they just sit there and never lend out. So that's kind of the unique value we added to the current market right now. We have just been completed auditing, and recently, you know, it's kind of start deploy the contract to the mainnet. And sooner or later, you know, people will start to know more about us on all the kind of ranking stuffs. So it's great pleasure to be here, you know, and to talking about more DeFi. Yeah, I like DeFi even before the concept DeFi born. So I'm so glad, you know, everyone is talking DeFi right now. Thank you.
Thank you, Jason. And as much as I remember, you guys had DeFi in your name before it became even so popular in this year.
Yeah.
Also, one thing I want to mention that is worthwhile to mention is Jason with his startup DeFiner is a graduate or an alumni of the famous Techstars Startup Accelerator, which is also a great achievement, I think, for seeing such well developed startups coming out now, traditional VC scene, entering the blockchain space. Something I wish we would have seen already many, many years before, for instance, in the last crypto craze in 2017. However, we have great panelists here. Hugo from the, as I explained earlier, infrastructure side. So he's building the infrastructure that is going to support the DeFi system. We have Miko here, who is seeing the whole space from a different perspective, from the investor's perspective, from the development perspective. Which companies do we need to develop in order to build a better ecosystem? And we have Jason here, who is directly building products for the day-to-day person, for the day-to-day investor. So I think with that we have panelists here from very different perspectives or from very different backgrounds. So the first questions I want to throw into the round is actually, what is finance? Before we go into DeFi, into decentralized finance, I'd like to hear under what each panelist thinks or what each panelist understands. First of all, finance is. Hugo, if you want to take the first.
Sure, absolutely. So I think just very quickly, it's the essentially dealing with money. So a lot of protocols call themselves, I've seen things being called DeFi or decentralized finance that are like prediction markets or sort of gambling. I think that's a very tenuous idea that's finance. So finance is the sort of the lending, borrowing, essentially the use of money to achieve things that cannot otherwise be easily achieved, such as, you know, a mortgage is a property that you can buy that you can't buy with your current net worth or your current liquid net worth. So you take a mortgage out, someone might lend you money, and you might pay that back over, you know, some period of years. That's an example of finance. Another example is, you know, an exporter or an importer wishes to move a product around the world, and they don't necessarily want to have that capital tied up whilst it's moved around the world because it might take 60 days, and so they'll finance that. So they'll borrow money to buy the product, put it on the sea, it lands somewhere, and they'll pay that off when it gets the other side. Things that are less likely to be truly, you know, finance orientated are things like equities. Stocks, I think, are, you know, less relevant to the discussion. Derivatives are a little less relevant to the discussion, although they all come under the finance category. So when I'm talking about finance, what I'm trying to get to the nub of is, how is money used really to solve the liquidity problem, which is what finance is really trying to solve.
Thank you, Hugo. Miko, would you like to add to that question?
Yeah, absolutely. So you know, I as a venture capitalist, you know, I'm sometimes referred to as a financier. So it's someone who provides finance, right? So, you know, if you look at the kind of concept of finance from a verb perspective, it really is about providing essentially energy, right? You know, obviously financial energy, not to use the definition and use the same word in the definition, but, you know, people understand it to mean money, right? And so to me, it's really energy, right? And it's, you know, financial energy, you know, and so the idea is that, you know, finance is really about distribution of financial energy, right? That's really what it's about, you know, and ideally in an optimal capital market, you see, you know, financial resources going towards, you know, the best, fastest growing and most promising technologies and teams and, you know, people, and the most trustworthy. Obviously, Sometimes in DeFi that doesn't happen that way, but it's there's all kinds of scams and funny rug pulls. But I would say that ideally it's financial energy that's being routed towards the most promising projects.
Thanks, Miko. Jason, would you also like to add?
Yeah, for sure. For me, finance is classified as services for money, and it's actually the key of finance, or the functionality of all the financial services is to help the society. We have 7 billion people, and we need to help the society to better allocate resource. And there's a very complicated process and the system and the mechanism. But that's all the financial industry they are doing. But the goal is actually better allocate the resource, either from VC, or the payment. And you will see finance is actually behind the scene of daily life, right? Because people need money, follow the money, or even the central bank, control the supply and demand of money, and to incentivize the demand, or sometimes, kind of push out more money. So, but basically, for me, finance it's just a means or a system created by everyone, right? To figure out how can we better allocate the resource. What I mean by better allocate the resource is you need to make the money to keep working and to flow to the people who really need the money, and create more productivity and the progress of the world and the technology. And so the whole financial system, all the investing, all the payment, for me, it's just a big system to better allocate the resources, or better allocate the reserve value people who just created. Yeah.
Perfect. Thank you very much, Jason. So now that we have a better understanding from each panelist about finance, why do we see such a crazy growth in recent time in the decentralized finance space? And what is the decentralized finance space in, first of all, why are people actually migrating over now, if you can call it at all a migration to decentralized finance?
I'd love to take a crack at that.
Please do.
Just to break things up. So the thing that's so fascinating is that people want fairness, and they want automation. And I think that's really what this is. So, you should look at Ethereum DeFi as a collection of smart contracts. And a smart contract is essentially like a vending machine, right? And so the idea of a vending machine is that, if as long as it's functioning properly, it tends to treat everyone fairly. Right. So in a sense, like, the thing that's happening, with this kind of system is that people want to effectively disintermediate the providers of finance. And they just want to have, this very pure kind of world of machines, because I think they're seeking a much fairer system of allocating and distributing resources. So I think that's kind of one of the things. But to answer your question of why is it taking off, I want to harken back to what I said earlier, which is that energy is really, really always looking for something to do, right? So, you can't have that much financial energy just sitting still, or else it'll just kind of rust and die. So, for me, this has been an explosive growth in Ethereum, and I think that's what you see next. I mean, I kicking the ball over maybe to Hugo, we could potentially see a similar explosion around the XRP ecosystem, which is another source of incredibly stored energy that doesn't really seem to have a DeFi as yet to direct its energy.
Yeah, that was one of our main thesis, really, of what we're doing, which is, you've got, at the moment, you have 75% of the assets in the space that is essentially unavailable in a trustless or decentralized way to smart contracts. So, the bulk of that is Bitcoin and XRP. And so, if it's not available, smart contracts can't participate in things like DeFi easily. There are wrapped BTC and things like that. So we've seen XRP principally as a really, fascinating, just almost like just a store of value just sitting there. So it has its use case, which is coming to fruition over time, and it's going to take, it's a very big use case, but there's also just this at the moment, I think 10-11 billion dollars worth of value just sitting there, which is currently underutilized. And so that's very much our sort of thesis. Where I'd like to go with, why is DeFi so successful right now? And I'd say, first of all, you've got a number of things going on. Is people are creating some really interesting, I'd say, almost like financial primitives, like initial ideas about, okay, so how can we do things that look a bit like what we've done before, but on a blockchain? So one of the things that's really hard is traditional unsecured lending, because you don't know who the counterparty is. So right now, most DeFi products are mostly revolving around market making, around increasing liquidity, around arbitrage, around allowing people to borrow, to be able to essentially sell, to go short. So it's about replacing the sort of financial sector trading intermediaries. And that's been extremely successful, I think, personally. Some of the craze is a little potentially artificial, with the idea that people are essentially buying liquidity by issuing community tokens, which give them governance tokens, which give them voting rights. So I'm not sure how sustainable those models are in the long term, because there's always another one that will come along. But I think you've got some really interesting initial technologies which are being built that will be branched out upon. And then I'd really like to go to see it facilitating something more meaningful than just arbitrage and replacing the existing financial services in the blockchain industry, but to go to something more meaningful that really really gets the energy that is stored in the capital of blockchain out to other people, out to people who are building stuff or need it for trade. But I think that's a really complex thing, and I think we're a long way off from that today.
Yeah, for me, I think, definitely DeFi is good, right? Besides the fairness, automation, also users will gain the ownership, self-control. So you don't need to go any others to ask permission. So you can do it by yourself. Then you feel safe. And this is all the service of DeFi. Definitely DeFi has a lot, characters or the perspective better than the centralized finance. However, this is not the main reason why DeFi becomes so popular this year, because we already have the technology last year, like 2019. The main reason why DeFi now becomes so popular because of the money, and because start from June, Compound, figure out a way to issue the token fully compliant, legally, then introduce the liquidity mining. Then a lot of people, early adopters, making a lot of money, and the people just follow them, say, okay, those people, they can make money. Then you have yield farmers, right, who is chasing the yield. Then the yield farmers making more money, then they issue their own LP tokens and even give more returns, because they attract a lot of people from secondary market to buy tokens, and the tokens have value, they issue the token back. This all give a very high yield to a lot of newcomers. And then this is a beneficial circle, right? More people come in, more money flow in, and all do this liquidity mining. And that's the reason why DeFi this year becomes so popular. And because people always looking for returns, and they are so excited because the traditional market is so plain. You put your money in the bank, zero interest. You put money in the stock market, is not too much return. And then you have DeFi and give you a return like 100% APY, 200% APY. And also, as Miko said, there's a lot of energy. There's tons of energy in blockchain, but nowhere. And now suddenly DeFi, hey guys, just come, you can make money. Then, you know, everyone just come this field. I think that's the reason why DeFi becomes so popular in the past several months. And it's not about the technology actually, but the technology actually gave a good fundamental, which is the meat. Then, you know, this just a catalyst make DeFi become so popular right now. Yeah.
Before we go a little bit deeper into DeFi, I'd like to throw the question into the round. What the original purpose of cryptocurrencies were? Well, what happened, or why was it invented in the first place?
Yeah, I think I can also take this. And I think Bitcoin is the oldest and the most successful DeFi project. Think about that. Liquidity mining, you know, learn from Bitcoin mining. And for Bitcoin mining, you know, you provide the computation power. For DeFi mining, you provide your liquidity, or the same is your asset, right? Just a different type of asset. Also for Bitcoin, the service of Bitcoin is about the payment and wire transfer, or, you know, big amount of payment. That's the fundamental service. For DeFi, you have all kinds of different service like lending, borrowing, trading, insurance, all kinds of base layer service. Then you also have token and rewarding system, also very similar to Bitcoin. So, but you know, at that time, no one classified Bitcoin as a DeFi. But just to take a look, actually, Bitcoin is DeFi, and that's the start of the cryptocurrency, right? So why we need the cryptocurrency? I think from day one in blockchain, the most successful use case is about eliminate the middle person in the financial industry. Basically, probably not about the middleman doesn't matter too much, but what Miko at the beginning say, automation actually matters a lot. And in order to you know, achieve automation, which we need to cut a lot middle person or middleman. And the overall financial system, every year, they consume around $5 trillion by all these middlemen. And the margin is around like 3%, 2%. For the lending is 3%. So by achieving automation through the cryptocurrency blockchain, and we can, you know, lower the margin, which saves trillions of dollars of money. That's my take for blockchain or cryptocurrency. Basically, we need to build the next generation. I'd call it Finternet or financial internet, which can handle financial asset transactions to achieve automation and decentralization. So that's the real meanings, what I can see for the blockchain and the cryptocurrency. And the cryptocurrency is just a matter of ways to achieve this. But I think that's a natural currency, or the natural, you know, the rewarding system on top of the blockchain to achieve truly decentralization. So that's my take.
So maybe I'll give a little reminder. Not very soon after our last financial crisis in 2008, we saw a white paper being published in a little group that was focusing on e-cash, or in electronic money. His name was Satoshi Nakamoto. And I think a lot of the pain that we were suffering back then, a crisis that was really initiated by centralized organizations like governments, like banks. I very much had the feeling when I was looking the first time at Bitcoin that that the attempt there is really to solve our nowadays problems that we have with our current financial system. And now we're seeing again financial crisis. In my point, one of the biggest the biggest one I've seen in my entire life, to be frank. And I wanted to know how you guys see that. Why are people using cryptocurrencies? We have heard from Jason already a few ideas, but why did it take so long until we were able to use them in a completely decentralized manner?
I think it really has to do with software, you know, because to me, like what people describe DeFi as is money Legos, right? So in a way, like these primitives have to be built, right? So, you know, if you look at the primitives, you know, in the very beginning, there were things like for protocol, which kind of formed this sort of first primitive base layer kind of, you know, market making construct, right? But then obviously Uniswap evolved after that, right? But the thing that is happening with kind of explosion is really really the formation of a base layer, right? Because, you know, so it takes time, but like that's the reason why we see so many exponential graphs in this space, right? Once you have kind of a base layer, then, you know, you really start to see, you know, more and more applications starting to sprout, right? So, you know, really when you see an exponential curve, it's a sign that you're dealing with kind of a developer platform, you know, and an ecosystem. And I think that's really, you know, what's happened is that the base layer has evolved and emerged.
Hugo, do you want to add to that as well?
Yeah, I think, you know, if you look at what's going on, I mean, it's really striking how the other day I needed to send some money to my co-founder. I had a couple of options. I could have sent, you know, my co-founder's in the US. Takes 2 days to clear bank transaction. Took I think it was 5 seconds to do an XRP transaction. It's really very much more efficient in many ways, and it's really accessible, and it doesn't rely on all the old backbones, which people seem for some reason hesitant to upgrade, and are still prepared to charge unbelievable fees, which are actually, whilst being less relevant, you know, for people in Europe and the US, are truly iniquitous for the rest of the world. The inability for vast amounts of the world to access affordable financial services is actually quite grotesque. And in fact, one of the nastiest things is that the people who can least afford it are charged the most. And so if you're looking for a reason for this to exist, that is as good a reason as any, and particularly one that we're interested in.
Thank you very much, Hugo. I would like to shift over a little bit to more focused on the current topics that we're seeing in decentralized finance. And a few of them have been already mentioned, like liquidity mining, which is maybe one of the bigger reasons why we see a lot of growth there right now. Which risks do you see for the very normal day-to-day person that is entering this unlimited, or I would say a world that has unlimited access and no one is telling you, be careful what you do? Which risk are you guys seeing there?
I want to start by talking about cybersecurity risk. So, you know, I think that's probably the first thing that should be on people's minds. So, you know, I think the most popular wallet in the DeFi space is MetaMask, but I think that, you know, anyone who's planning to do that should probably connect a hardware wallet so that they can kind of keep their assets secure. I think that security is pretty important. I would say the other thing that is also important to consider is that, you know, I think yield is generally proportional to risk. So, you know, I think who are just chasing yield, they need to be a little bit maybe more balanced or a little more measured, because there are things like impermanent loss, and there are things like, so I would say cybersecurity and also risk management, I think are both important.
Before the next one is jumping in on his questions, I quickly like to remind the audience that we're going to start with a Q&A round in about 5 minutes. So if you could think about some questions you would like to ask, we will start with that in 5 minutes. And now I give back the word to our panelists.
Oh, okay. I probably add something on the liquidity mining. And for liquidity mining, people need to be careful because all the high yield you can see came from two parts, right? One is from the service itself, like trading, lending, but that portion is very small, like probably around 10%. We call it small, but it's even already better than the traditional world. But the rest of the portion came from the token. And then you need to understand why the token has the value. Then, it actually came from the trading. So if your gain is from the trading, which means your gain is from other people's loss. So which means, the early adopters or early participants in the mining has, actual, unreasonable return, because there are people from, after them to participate in this liquidity mining, or they purchase the tokens on the secondary market. To be careful is this is a mechanism that cannot sustain for very long, because eventually you will run out of new capitals or new blood. And as long as there's no more newcomers or the new capitals, this cycle can reverse to become a more vicious cycle, which means, the token price will collapse, and a lot of people will, lose money, especially people buy from the secondary market. So my suggestion is, this liquidity mining, participate, mining just like Bitcoin mining, get the machine, provide the service, get some reward. And the same with the liquidity mining, you can provide capital, get some interest or some trading fees, also get some tokens. Even the token go to the zero, you will not lose. But be careful to buy some tokens on the market, because anyone who buy tokens on the market, especially those DeFi liquidity mining tokens, actually you are the person to support the profit, the people who participate in the mining. So I think that's more the risk other than the security, but more from like speculation or participate in the liquidity minings. Thank you.
Hugo, would you like to add to that as well?
It's definitely been covered.
Okay, great. For me personally, I've been, I don't know, I had sleepless nights researching about yield farming and liquidity mining. What I could say from my side is to everyone, and there was also a survey, I think, that just came out today or yesterday from Cointelegraph, talking, they surveyed, I think, around 1,600 yield farmers. It came out that most yield farmers don't even know what they invest in. I haven't even read the smart contract. So for everyone that is listening right now, before you engage in any of these liquidity pools or in liquidity mining, really do your research. And I tell you, that research can take quite some time. You should know what you invest into and be really aware of your risks. But enough about risks. I want to talk a little bit about the scalability issues we currently see, because DeFi, or today's decentralized finance application, really emerged on the Ethereum blockchain. And what many what many traders now see is increased gas prices, congested networks where transactions just take ages to clear. And I wanted to understand what our panelists are thinking about the current scalability issues and which solutions we may have on the horizon.
Yeah, happy to weigh in. My friend Jing is working on a project called Optimism, which I dare say I'm optimistic about. It's basically optimistic roll-up layer 2 Ethereum construct. I think that there are a number of novel layer 1 constructs that are in the works. I think notably things like Solana with Serum, obviously Flare that Hugo's working on, and then of course there's, dozens of novel layer 1s that provide really interesting novel consensus like, Avalanche that Flare is based on, and there are many others that I think are coming. So, I would say that to me, the idea that there is a demand is a great thing, right? So obviously the supply of computation is not sufficient to meet the demand. It's better than the alternative problem. So, I think these are technical problems with technical solutions. And I think one of the things that's a hallmark of DeFi is the pragmatism. So people are no longer stuck in purism, and now they're moving towards pragmatism. And, I think the solutions that people will embrace will be pragmatic.
I don't know, maybe Hugo or Jason, would you like to add? Yes, Hugo, go ahead.
So yeah, I think I think there's going to be a lot of different ways that this plays out. I think optimistic roll-ups are great. I think newer layer 1s are very interesting. There's lots of different protocols out there that can scale. I think the core thing that probably will help predict which protocols end up scaling, at least in the near term, is how much value they can bring to bear. Because really what you're seeing in this space is that it's value that people can use in their applications, whether it's DeFi or any other application that is really relevant to where people put their time and their energy. And then the last thing I'd say is we do have to solve it, because right now DeFi and everything we're talking about is accessible to a tiny amount of people, at least as it is on Ethereum, because the gas fees are so high. And if we're going to make this actually decentralized, it does need to be accessible to everyone.
Thank you very much. I would like to start now with our Q&A session. I see already a lot of questions coming in here. So I like to start with the first question we got from Alex here. How do you see DeFi stablecoins evolving, especially around central bank digital currencies? I personally, like, before I give the question over to the panelists. So I think a very interesting announcement today that in the United States, banks are now being allowed to provide services to stablecoin provider. So the reserves of stablecoins, like the US dollar, banks are now allowed for stablecoin providers to allow them deposit US dollar in the bank account so that they can give out one-to-one US dollar into digital currency to their customers. But yes, now the panelists, please.
Yeah, I'm happy to touch the whole CBDC issue. I was just actually an hour ago putting the Tezos founders on my show, the Miko Bits show, and they actually are working on an exciting project with Société Générale, who is working on putting the Tezos public chain as part of a Bank of France CBDC project, right? So we are seeing the emergence of central banking as well as regional banking initiatives that are formed on the blockchain. My fund is actually involved in a project called Tacit, which underpins a technology for signature bank called the Signet network. And it's essentially a dollar-pegged interbank transfer coin that skips over Fedwire. So, it's a very, very interesting and powerful trend. So, I think in a way we already kind of are segueing into this institutional trust concept as well as the stablecoin evolution question. So there's definitely some cool touch points on what we're talking about with these projects.
Thanks, Miko. Is anyone in the panel who would like to add to that? Or should we go over to next? Okay, Hugo, please go ahead.
I think you've got a sort of an interesting feedback loop going to happen, which is, as central banks get more comfortable with the technology, and then they are seemingly getting more comfortable, and potentially if there's interoperability with existing blockchains. So, if central bank digital currency exists, it would be great if you could use it on a blockchain like Lair or like Tezos or whatever. Then that would make that central bank digital currency a sort of component of composability. But let's be absolutely 100% clear: central bank digital currency cannot be decentralized. It's just like it's sort of it just isn't. But what I would say is that the feedback loop is that as this becomes more acceptable, to the institutional space, then the products we build in the decentralized community probably also then become more acceptable to them in a reciprocal nature, and so everything can become more formal. So it's not a replacement. Is what I'm trying to get to, is that decentralization is not a replacement, and central bank digital currencies is not a replacement for decentralization, and that's an important thing to understand. But rather, they can symbiotically grow together. Because we've had digital currency since the 70s in one form or another, just not on a blockchain.
Thank you, Hugo. If Jason, if you don't want to add anything, then I would like to go over to our next question, which is, yes?
Yeah, I just add one word, like,
yeah, sure.
The current stablecoins ecosystem is too centralized, actually. So I will see that at risk, and before we can, evolving from like billions of dollar like stablecoin industry to trillions, the whole industry need to figure out how can we issue more decentralized stablecoins. Otherwise, I don't see, it will go that big unless, the central bank or the government start to issue their own stablecoins.
Thank you. Then we have a question from Michael, who is asking about how does DeFi gain institutional trust and interest? So I think one thing I like to add there is that in the liquidity mining space, there are probably more institutions involved at the moment than we could think, or that we are aware of. Since there are so high fees, for the average retail trader participating in general participating in DeFi right now is just too costly. So I think we see already a lot of institutions that are existing in, or that are acting in the DeFi space. But what are our panelists thinking about that?
Maybe I can start with this one. So because the high cost of the gas fees, and it makes no sense for a smaller amount to participate, and but actually that some very interesting is going on right now. A lot of CeFi players like cryptocurrency exchange, cryptocurrency fund, and they start to because it's DeFi is disrupting the CeFi, right? Centralized exchange or centralized lending borrowing players. and they realize a lot of users actually really withdraw fund from them and participate in the DeFi. So they are very afraid at the beginning, and now they figure out a way how to be part of this, because there is a high cost of gas. So this is actually something they can solve immediately without any technology breakthrough. So in the Asian country, and even like in other part of the world, a lot of exchange, they start to have DeFi savings or DeFi loans or DeFi, the trade investment product. And they offer those products to their users to tell them, the gas is so high, and why not just use our service to invest and participate in this liquidity mining. So this is definitely very interesting things going on. I will sure like a lot people will see a lot of similar product like this, like CeFi players offer DeFi product to their their users, and to solve the gas problem. Basically, it's simple, right? They aggregate all the volume and to do the liquidity mining, and then it still makes sense. It's still cheaper. Think about like for the trading, right? Usually you get like 1/10 of a percent or 2/10% for the trading phase. In DeFi, it can be much lower than that. So if the volume is big enough, it's still much cheaper than the CeFi. And yeah, that's just some observations what's really going on recently, and how people start to play new roles, right? CeFi offer DeFi products.
Thank you very much, Jason. I think we now need to head over into our closing announcements and into our closing in general. I think Dr. Lee is going to have closing remarks. But before we're going to go over to the closing remarks, very quick, if our panelists have to make a little announcement or would like to share a quick message, we should do so now. Hugo, Miko, Jason, if you have anything you'd like to share, please let us know. And then we go over to Dr. Lee's closing remarks.
I think there's some great links that are popping up right now in the chat to all the LinkedIn. So, feel free to connect there. And if you have any comments or questions, you can engage, I think, all of us there.
Thanks. Okay, then I think I would like to give over the word to Dr. Lee, and he's going to give our closing remarks.
Okay, well, first of all, I want to give a big thank to all the panelists and also moderator. Did an excellent job, and also I'm very enjoy seeing that we have a very good engagement between the participants and also the panelists. Lots of questions popping up in the chat box, and this is very pleasant. And I really hope that we could extend this event to 2 hours, 3 hours. I know there's more questions coming up, but unfortunately we have our schedule. But Aves Lair will host more events on timely topics like this one in the near future for sure. So I hope everyone can follow us on our website and also on the links in the chat box. If you have we also leave our email address there. If you have any questions about our accelerator, our events in the future, just feel free to shoot us an email. We'll be more than happy to answer any questions you have. And thank you everyone for your time and for your joining us this event. Very successful one, in my opinion. And I will be more than happy to see you in the near future. Thank you, everyone.
Thank you very much, Mr. Lee. And for everyone else, we had a lot of topics we couldn't cover today because it's really a large topic. It's also a very interesting one. Other topics I would have loved to speak about were tokenomics or governance, and especially how governments can regulate decentralized projects. If you have the opportunity, feel free to join our community, Crypto Traders International, and we have a chat group where we can continue the discussion. Thanks everyone for participating. I enjoyed very much our event today as well, and our very great set of speakers. And I'm looking forward to see you next time. Thanks.
All right.